everyone, welcome to Hot Money. I'm Hiral Dadia and with me is Agam Vakil. A very good morning, Agam, but let's quickly head across to the headlines straight. It's a wonderful Wednesday on Dalal Street as Nifty Sensex notch fresh highs at open, broader markets outperform. Most sectoral indices trade in the green. Oil and gas surges over 2%, followed by FMCG and consumer durables. And Varun Beverages off highs after popping over 18% on news that the company aims to acquire South African beverage company Bevco. And a stellar debut from Doms as it sees over 77% premium to its listing price. Meanwhile, India Shelter also lists on a strong note. And Tamil Nadu Chief Minister M.K. Stalin requests PM Modi to release 2,000 crore rupees as relief for supporting infrastructure as heavy rains deluge the state. Let's quickly head across to Agam to understand what markets are doing. Agam, clearly you have the broader markets which are outperforming the benchmark indices. The expectation was of a range-bound trade. What are you picking up?
Yes, absolutely, Hiral. You know, before I talk about the broader markets, a very quick look at what's happening with the Nifty and the Bank Nifty. For now, we are looking at advances. The Nifty is up around 0.3 of a percentage point. And when it comes to the Bank Nifty, it's marginally in the green right now. So the Bank Nifty is actually underperforming the benchmarks as we speak at the moment. All the traction is coming in from one particular index, and that's the oil and gas index. So both the NSE as well as the BSE oil and gas indices are up and about, and all of these are on account of one stock specifically, and that's Oil India. That's up as much as 14% at the moment as we speak, and we do have a lot of impetus in something like an ONGC as well. It is these two stocks which are in fact leading these key indices higher, and which is also the reason why all the oil and gas indices are also up and about at the moment, as you can see on your screen there. Now, besides that, as far as your broader markets go, we are looking at substantial gains in something like a Voltas, which is also trading near its day's high. It's up around 6%. We have gains in AU Small Finance Bank, which is also advancing by around nearly 5% in trade as we speak. And we have gains in Jubilant Food. Now that's up around 2.5%. So these are some of the big gainers. We don't have too much in terms of losers, at least as far as the mid-cap space is concerned. Something like in Indian hotels is down around less than 1%. So clearly, a lot more traction towards longs as far as your broader markets go in varied sectors, but I reckon that for now, Oil India is in focus.
Absolutely, and this is after the windfall tax as well. There is some bit of an up move that comes in on this sector. But let's quickly shift focus in terms of the stocks that we will be discussing in today's session. Varun Beverages on the back of the acquisition. Strong moves on that one. Embassy REIT on the block. Nippon Life again will be in focus on the block. RBZ Jewellers and Motisans Jewellers. Now the question is it the best time to invest in the IPOs of jewellery companies or invest your hot money in terms of jewellers which are already listed in the secondary market? IT companies also will be in focus. TCS, Wipro, Infosys after Accenture has reported numbers. So these are the ones we will be discussing in trade. And to give us their expert opinion, Rajesh Agarwal, Research Head at AUM Capital, will be joining us. Rajesh, good afternoon and welcome to the show. And before we head across to you for your views, let's start with a Varun Beverages in trade. The stock is rallying in trade today. The company will be acquiring 100% stake in South Africa-based beverage company Bevco, and this is for 1,320 odd crore rupees. My colleague Mahima will be joining us with what brokerages are making out of this acquisition. Mahima, kindly give us the details firstly in terms of what the deal is and why is the stock buzzing?
Right. Here, as you rightly mentioned, VBL is set to acquire 100% stake in South Africa's Bevco. The funding shall be done by an investment PE fund, and remaining VBL will be raising through via debt. And through this, now VBL will now have access to 10 African countries as a whole. Now, a few statistics about Bevco. Bevco has franchise and distribution rights in South Africa, and it operates both in PepsiCo brand and it has its own brands as well. And if we talk about the volumes, they've reported 117 million cases for FY23, which is approximately 80% of VBL's international volumes and 15% of overall volumes. Now, if we talk about the South African market for beverages, South African market has the largest soft drink consumers per capita, where they consume per capita 240 bottles per year. So, and at present, Coca-Cola has a lion's share of 45% in South Africa altogether, and Bevco has around only 10%. So, VBL acquiring Bevco will help PepsiCo gain market share in South Africa as a whole. And recently we also had a news where Varun Beverages signed an MOU with the Jharkhand government for setting up a manufacturing capacity with a total outlay of 450 crores. So overall, if you see, FMCGs are now foraying into different geographical markets, with Devyani acquiring the Thailand market and now Varun Beverages is acquiring Bevco in South Africa.
Absolutely. Right. In fact, the company is on a tear as well with acquisitions, and nearly the stock has doubled on a YTD basis. But before that, what are brokerages making out of it? Mahima, if you could help us understand that.
Right. So we had 3 brokerage report which came out today, MQ on Varun Beverages, which said that post 70% run-up of the stock in the past 52 weeks, they maintain a reduced rating with a target price of 1150. Then we had CLSA on VBL also, where they raised their rating to buy with a target price of 1419, and then we had Jefferies on VBL, which rated it with a target buy with a target price of 1100, and they expect that this target price will add 7 to 15% in the EBITDA volumes in the coming years. Also, we had I had seen the analyst recommendations as a whole. 15 say buy, 3 say hold, and 1 say sell. So this is the overall perspective of the brokerages.
Thanks, Mahima, for getting us the details. Rajesh, let me come to you with regards to Varun Beverages. What is your view from a valuation perspective as well? Do you think it is still expensive and the right time to sell the stock right now, or would you advise to enter at current levels as well?
Good afternoon. Thank you for calling me in the show. As far as Varun Beverages is concerned, we have been bullish since a very long time. By very long time means we have been covering this from the last 5-6 years when it was quoting at 100-150 odd rupees. But that's a long story. At this point of time, it's one of the largest PepsiCo bottlers outside the US, with around 90% of Pepsi sale in India. And not only India, it has operations in neighboring countries like Bangladesh, Nepal, etc., Africa also. And now with the recent acquisition in Africa, they are going to get a foothold in Africa, and that's a very high margin business, because that African company which they have acquired have a lot of other products than Pepsi, their own products, for which they can have access, and in the very big area of Africa. So that is one of the positive. And if you look at the Indian operations too, for the next 3 years, we expect 20% of CAGR growth in revenue and bottom line. With the kind of temperatures rising, the sale of cold drinks is going up by like anything in summer months. And even the non-carbonated drinks portfolio which they have is doing very well. They have recently announced their foray into other beverages category. So I think one can continue to hold if somebody has a long-term view. We have a medium-term target of around 1480 in this. One can continue to hold. Somebody looking for a short-term view, maybe 1 month or 15 days, I think it's time to book profit and re-enter at lower levels. But I would like to reiterate that for a longer-term investor, it's a hold.
Sure. All right. That's a view on Varun Beverages. And from there on, we move on to the other sector that we want to address, and that's the jewelry sector. We've had a whole host of companies from the jewelry sector which are coming up with IPOs. Some of them are already listed. We want to understand as to how the upcoming primary market participants from that sector plays against the ones which are already listed, something like a Titan or a Kalyan Jewelers. For that, we have Mahima back with us to give us an update on the same. Mahima.
Right, Agam. So if you see the valuation part, from the valuation perspective, the new IPOs, that is RBZ and Motisans, are cheaper than the listed players at present. However, if we see Motisans and RBZ as compared to the listed players are very small. That is why the valuations are cheaper. Then if we talk about the earnings CAGR and the margins, again, the IPOs that are coming place, that is RBZ and Motisans, the earnings growth and margins are very strong as compared to the listed players, where we can see that the earnings CAGR for RBZ was 64% and for Motisans it is 31%. So in this segment also, at present, if we see the IPOs are better than the listed players. Then if you see the geographical presence, of course, the listed players have, most of the listed players have pan-India geographical presence, whereas for RBZ, again, it is a pan-India presence. However, it is not as large as compared to the listed players. Motisans, however, is very small. It is just concentrated to the Jaipur segment as of now. If you talk about the number of stores, again, the listed players are huge in terms of number of stores. Sky Gold having 2,000 stores across India. Titan having 844 stores across India, Kalyan Jewellers having 1,206 stores across India. And if we see the stock performance of the listed players, we've seen a stellar growth in terms of gold giving returns in terms of stock. We also had an analysis where the stocks have given more returns as compared to the gold, physical gold, if we see. And we've seen an amazing rally in terms of 1 month, 6 month YTD and 1 year as a whole. So overall, if we see in terms of stock perspective, return perspective, listed players are of course better, but let's see how the IPOs pan out.
All right, Mahima, thanks for giving us those updates. So Rajesh, let's take this up with you. How would you peg the newer entrants as against the incumbents as far as these the markets go? Of course, while the valuations are cheaper, they're also relatively smaller players, but that also means that growth could be higher as compared to some of your larger established players who are already listed.
See, as Mahima rightly pointed out, that they are smaller players. For example, if you talk of Motisans, they are only located in Jaipur, if I'm not wrong. And these are regional players having very small operations. And gold jewelry business is such that people have to have faith way before they go for buying. So unless you are a pan-India player or having a good brand name, I think business is not going to grow multi-fold in a very short period of time. So that's the problem with smaller players, and that is the reason the valuations are on a lower side. New IPOs, it's a time which is going like flurry of IPOs are coming up. In this week only, there are 8 main board IPOs and 4 SME IPOs. That makes 12 IPOs in this week with 8 listings. So it's like a flood of IPOs, and every IPO is seeing a high GMP and people are applying. That's a different story. But for a longer term horizon, if somebody wants to invest in gold jewelry business, I think Titan would be the first choice, no doubt at all. And the second one would be Senco Jewelry, which is not a pan-India player, but still it has presence in many more cities of India.
Okay, fair enough. Stay with us, Rajesh. We slip into a short break, but on the other side, we talk a lot more. Stay tuned to NDTV Profit.
Welcome back. You're watching Hot Money, but let's shift focus to Embassy REITs that has been in focus as well on the back of a major block deal. Blackstone, which is going to exit, has exited Embassy REIT via mega block. Saloni joins us to give us more details with regards to how much have they sold and who are the ones who've exited and entered the company. Saloni, over to you.
Thanks, Hiral. So yes, Blackstone has fully exited, its stake in Embassy Office Parks REIT. It had 23.5% stake as of September, so that they have sold. And from our sources, what we've gotten to know is that they have sold it at rupees 316 per share. And Blackstone has raised about $850 million or over rupees 7,000 crore. And the likely, buyers from this is Capital Group, Fidelity, Bain Capital, ICICI MF, who have actually raised their stake in the REIT, given that they were already, investors in the REIT. And a new investor that has made the, list is SBI Mutual Fund, which did not have any investment through its funds in Embassy REIT, and now apparently has picked it up through this block deal. So that is the update that we've gotten from our sources.
Right. Thanks, Saloni, for getting us the details. Rajesh, let me come to you on Embassy REITs. No major moves if you see in terms of the last 1 year on this counter. What's your view?
See, no major moves is just because it's not a pure equity play, and retail investors have understood this, because previously when this product came, REIT, everybody thought it was an equity play and people jumped in. But now it's a quasi-equity play, which only the ultra HNIs are banging in. So I don't think there is any big retail participation in that, and that's the reason there is no big move. It's only for those who are looking for a long-term haul in these kind of product, where you get return on capital by in two ways, one by distribution and one by return of capital. So these are only for ultra HNI kind of people. I don't think retail would be much of interest, and that's the reason there is no move in the stock, in the price of the REIT.
Okay, well, we do have Saloni still with us, and she's also going to tell us a little more about the details with respect to IndusInd Bank offloading over 2.8% stake in Nippon AMC. Saloni?
Yes, that's right. So Nippon Life AMC has actually hit a record high on the back of this block deal. Now we know that from our sources that IndusInd Bank has sold the stake in the company. That's 2.8% stake that they had as of September end quarter, and the buyers are not yet known immediately. And but what we know from our sources is that the floor size has been set at rupees 426 per share, and the offer size is about 761 crore. So that is what we've picked up.
Right, Saloni, thanks for that. Rajesh, I'm going to come to you on this one, and perhaps the entire AMC space, because we really haven't seen too much spark, despite the fact that markets have gone from strength to strength. How would you advise? How do you perhaps move through this sector? How would you address Nippon AMC and perhaps something like an HDFC AMC for that matter?
See, AMC business is on a stronghold. One, because mutual funds are still underpenetrated in a country like India. Despite all the regulatory bodies' desperate attempt to educate people about mutual funds, they are still underpenetrated, and there is a lot of scope for growth. There is a lot of SIPs coming in, and that's adding to their bottom line. If we talk about pure Nippon Life, they have a corpus of around 350,000 odd crores. And they have a contract with EPFO from which they will be getting around 15,000 odd crores every year. That is going to add 5 to 6 crores to their bottom line. So these are the plus points. Even the first half of the numbers were quite good. And if you talk of valuation, it's trading at a huge discount to other players. So I think somebody looking for an investment in an AMC business, Nippon is a good play for maybe 6 to 8 months. Even after this kind of rise in the last 2 days, yesterday and today, I think another 10-15% upside is still possible.
Right, another 10 to 15% upside that could be on the cards as well. Stay with us, Rajesh. You have IT that is in focus as well. Accenture posted its first quarter numbers. Now, the revenues have actually missed estimates but still maintained their 24 guidance. What would this actually mean for the Indian IT companies, and whether the Indian IT companies are actually taking into consideration the numbers? Tushar is joining us to give us a breakdown of what would this mean. Tushar, over to you.
Good afternoon, Hiral. So we can safely say that Nifty IT since the morning has actually shrugged off Accenture's forecasts for the second quarter. So Nifty IT has today emerged as the top gaining index in the Nifty. It was the top loser yesterday. The gains were led by LTTS, Persistent Systems, as well as LTI Mindtree. Now the outperformance is despite Accenture's warnings on near-term pain. Accenture has maintained its FY24 guidance as you mentioned, but warned on the Q2 earnings. That's December to February. Deals are still coming in as per Accenture's earnings, but they're still not converting meaningfully into revenue. It's the same scenario what we have seen in the last 4 quarters. Discretionary spending again is still not coming in. That's weighing on the consulting practice of Accenture, which means a pain for Wipro going ahead. Accenture's North America revenue has also shrunk 1% in the first quarter. North America, as we all know, is the biggest market for Indian IT companies. Now, what this exuberance actually in IT stocks has some analysts worry. So Nirmal Bang said that there's a back-ended pickup in FY24 would have to be sharper than earlier expected for this bullishness to actually fructify in the future. The weak guidance in Q2 of FY24 by Accenture could mean weak Q3 for most IT companies. Also remember that Q3, that is the October-December period, is the weakest for Indian IT companies traditionally.
Right. So, Tushar, very quickly in terms of the margin profile as well, what is that indicating? 30 seconds.
So, so essentially what IT companies have done so far is that while revenue has not come in, they have been able to maintain margins at the traditional levels that they have seen so far. So for a TCS or Infosys, it's in the low 20s. For others, it's about in the high teens. Tech Mahindra has suffered a lot. It's down to 3%. So what they will do is look to maintain that profitability figure still. But what margins levers will they put in place? Because furloughs are coming into place. Wage hikes have also happened in this particular quarter in the October-December period. So what else they can do to shore up margins is what remains to be seen here.
Right, lots to watch out for. Thanks, Tushar, for getting us the details. Rajesh, a quick question. IT, what are you looking at and what would your top picks be?
See, we believe that IT's valuations are very attractive, I would say, especially the larger ones. Because of uncertain global environment, the stocks had not performed for a very long period of time. It's only when the Fed news came, it jumped. So even after that jump, I think there are a lot of stocks, especially in the larger names like Infosys or TCS, that can be accumulated for a longer term horizon. The deal pipelines are on. The no large-scale cancellation has been reported. Yes, the management commentary is not that great, but still for a long-term horizon, I think they have strong balance sheet and they give up good dividends. And as a bonus, every year they come out with buybacks also, which is a very good opportunity for retail investors as such. And the companies doing in cloud, AI, generative AI are going to do well.
Right. Rajesh, we're running out of time, but we'll take more details from you on the IT pack. Thank you so much for joining us on the show. We'll quickly slip into a short break and we'll be right back. Please stay tuned to Hot Money on NDTV Profit.
Welcome back to Hot Money. Now, IPOs are the flavor of the season. In fact, two companies that made their stock market debut today got interest worth over 1 lakh crore rupees during the IPO stage. The question is, in the rush to grab a slice of the IPO pie, is there enough value for investors? Bharat Lahoti, who manages the Edelweiss Mutual Fund's recently listed IPO fund, thinks so. Here's what he said.
If you look at the IPO, as you rightly said, there would be times where there would be many IPOs in the market. There would be times there would be a lull kind of scenario. And it all depends on how the underlying capital market behaves. If the capital markets is active, we will see a lot of IPOs which are coming in. And you would see actually also in terms of valuation, the way the primary deals have been valued is also a function of capital markets behaved. In the early part of the cycle, you would see actually a lot of discount to existing peers, which will happen for many of the IPOs that get listed. And then eventually the discount gets narrowed down to be on par with the peers, and then sometimes also premium to the peers. So the investors have to be very cautious about IPO markets in general. When are you getting into IPO markets? How they are getting into IPO markets? Because selection is very important in IPO markets. If you look at data suggests that 30% of companies have not actually reached the price of listing price for many of the companies which have been listed over last year.
Hello and welcome to the Portfolio Manager on NDTV Profit. My guest today is Harsha Upadhyay. He manages nearly $12 billion at Kotak Mahindra Mutual Fund. He's a ACE fund manager, and he manages 11 fund for the fund house. Harsha today joins me today. Harsha, my first question to you is, I was going through your presentation and you were neutral on equities. My question was that, at the time when we've seen this run up in entire markets, why are you neutral on equities?
Good afternoon, Sajid. If you look at the way we are looking at the markets, clearly the undertone continues to be bullish. The macro concerns have abated. The fundamentals have started to show up in terms of a reasonable degree of confidence on our earnings trajectory. So our overall view is equities will continue to deliver reasonable returns from here on for a medium to long-term perspective. However, when you look at the valuations